My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. Hey, exciting interview today. Rani Tamari is zooming in from Haifa, Israel. Rani is a very experienced real estate entrepreneur. He just celebrated 20 years of real estate investing. He's seen ups and downs and all arounds. And coming from this kind of bicultural background, Israeli American, he really kind of understands how things work in the States. That's where he does all of his investing, and how things work from afar, because he helps people invest out of state. He helps people invest from other countries into the United States. So, Rani, looking forward to our conversation. Welcome to the call.
Thanks, Dave. Thanks for having me.
So, quick. Give me a quick little snapshot of what your real estate business looks like today. What are you doing? What are you focusing on? If you currently have rental properties yourself, what are they? Where are they? Just give us a 30,000-foot snapshot.
Okay. Well, if I have to go on the, high level view, I built kind of a small real estate empire when I was married. And then when I got divorced, that happened like a year or two ago.
Poof. There goes the empire, man. I've been divorced myself. I know what you're talking
about. We had to liquidate the company. We had a real estate investment company, LLC. And I'm basically building my own portfolio as we go. So I actually got in Israel, you get the official note that says you're divorced. You get that on top of your usual ID card. So I just got that, I think May or April 2023. Yeah, around a year or so. So I've been investing since 2004. I moved to San Diego in 2003. I picked up a book about real estate investing and learned it, and then started doing it. And I moved to a few cities. But right now, my focus of the company is basically to build relationships, right? It's really a friend brings their own friend and family and so forth, to coach them, to explain to them the differences between the real estate market that I'm investing in, currently mostly Florida, and the market that they live in. Because people are used to what they have. So people in New York are used to New York, Manhattan prices, and that seems normal to them, but it's not normal for people in Arkansas. So, that's the strategy. So I'm starting here with mostly my Israeli network, people that live in Israel or in the US or Europe and want to invest in the US. And the idea is to expand to Spain, England, Germany, and so forth. I have some contacts that I'm trying to build agents there.
Yeah. So really, you're helping people who are either out of state or out of country invest in profitable markets in the States. Would that be a fair?
Right. Yeah, I've been investing in stocks for 25 years, I think, and I've basically discovered that there is a way to reduce the risk on your investment in real estate, even though it seems riskier because it's farther away than your usual IRA, whatever, mutual funds and all that stuff.
Yeah. Okay. Well, let's just maybe look at it from the perspective of, let's say you're working with an Israeli client who's never invested in the States, maybe never even set foot in the States. And how does that conversation go? How do you show them kind of like what the big benefits are, big picture, of, instead of investing in Israel, investing in the States? And then that'll extrapolate to people that are in different states as well.
Yeah. So Israeli market, and I think Italy and some other countries, Greece and so forth, have a problematic history of two items. One is inflation, and the other is stock market crashes because of non-financial issues like war.
Political turmoil and stuff like that. Yeah. War.
Right. So basically, these people are already people that have a rental in Israel, or were thinking of buying a rental in Israel, and they have the money for that.
Mm-hmm.
And then I say, okay, this is what you can do in Israel, and this is what you can do in Austin or I don't
Florida, I
know,
guess, at this
Melbourne,
point.
Florida, or whatever state I'm working at the market, and basically show them that the risk is lower, the return is higher, and you have the option to refinance, which is incredibly hard in Israel, it's impossible basically. And slowly build confidence and say, okay, let's take it step by step. And even though I made the most profit I made ever in real estate was obviously when I bought in 2008 and 2009, when you can buy with cash, houses for nothing.
Yeah.
I'm currently, both for myself and for others, are only doing new construction because I believe that this lowers the risk. It might also lower the return, but people are worried about when this remote and remote control, out-of-state investors, they want low risk.
Yeah.
So that's what I'm focusing on.
So what kind of new builds are you focusing on, Ronnie? Are these single family homes, multifamily, tiny homes, commercial, industrial? What kind of properties?
So after I liquidated the company and we closed it, I had an option to start anew and decide, okay, these are the states and cities I've been to, where should I go now? And after a lot of analysis and Excel and graphs, and so I decided on the state of Florida first. So I zoomed in on Florida, and then from Florida, I decided to give 3 markets a try. I'm only doing single family home. The criteria is at least 3 bedroom, at least 1,400 square foot, brand new construction, good neighborhoods, good schools, where the numbers still work with the interest rate that we have right now.
Yeah, well, so what kind
So,
of markets are those in Florida? Because that ain't going to
so
work in
right,
Miami, ain't going to work in Naples.
right.
Whereabouts?
I have had Palm Bay, just
Uh-huh.
south of Melbourne on the East Coast. I have on the West Coast 2 markets. One is Northport in Sarasota County, and I have Lehigh Acres right next to Cape Coral.
Okay, very
So when
nice.
an investor comes, I don't try to tell them go to this builder or that builder. I tell them these are advantages and disadvantages. But I feel that all 3 have a lot of growth coming into them, both migration within the US and immigration from Latin America, that are coming into these cities, Walmart moving in, Costco, that kind of stuff. I think that when the economy is strong and you manage to get 70% loan to value, fixed rate mortgage, um, your risk is really limited.
So
And
you're building brand new 3-2 houses as rental homes, if I'm understanding correctly, right?
I have 3 builders I'm working with.
But this it's a single family home,
It's
usually a three
always single
two,
family home. It's 3 or
and
4 bedroom. It's
okay.
let's say between 1,400 square foot and 2,000.
And
That's
are
kind
you
of the
renting them
size
out as
change.
traditional rentals, short-term rentals, midterm
And these are
furnished
long-term
rentals?
rentals, families. I make sure I do the research and find a property management in advance, even before the house is constructed, to make sure, test them out. Another good thing, the minimal city that I invest in is either a city attached to a 500,000 population city, or a
Yeah,
city that itself is at least 80,000 people.
yeah.
In those type of cities, in both 3 that I mentioned, it's not, it's easy to move property managers. There's plenty of property managers
Yeah.
to find. So that's not the issue. That's what most
I'm
people
just
are
I'm
actually
just
worried about.
curious about the cash flow on a single family home in these markets, especially a brand new build. Are they still
Right.
cash flowing?
Right. They still cash flow. When you buy these type of new homes and not do BRRR or those things that I did before with older
Yeah,
homes,
value adds. Yeah.
you lower your risk, but your cash flow is really goes down to, I don't know, 2-3%, depending on the rate you get. So I keep telling people don't count on the cash flow. If you look at the calculator that I built, okay, your return is going to go 80% is going to go from leverage and appraised value, right? On prices, and
Appraised value
20%,
or increased value over time.
sorry, increased value over time
So
plus
market
leverage. That
appreciation.
together is 80% of the profit, and 20% is the rent, which is your cash flow is the rent, right? So I'm saying, okay, and you're getting a lower return. It's even lower than US bonds or whatnot.
You mean your
That's
cash on
fine.
cash return?
Cash on cash return,
Yeah.
that's fine. But but remember, that's only 20% of the deal. You don't see it's in the shadow of when you're gonna sell in 5, 10, 15, 20 years. If you're in the right market that's going up 4, 5, 6% a year on average, then it really doesn't matter the cash flow. And
Yeah.
if you need high cash flow, um, what I do for myself is just buy cash in slums in Ohio and do build to rent stuff like that. But I really it's just like I buy specific stocks. I'm doing high risk, high return. I'm managing it myself. It's a slum. I'm not trying to get anybody, not from Israel or Italy or Germany or anybody to buy slums. I don't sell that.
Okay, so you're helping your clients to buy or build single family homes. Are these things already built? They're just brand new, or they're building them from scratch?
Mostly they start construction after they get pay a deposit.
Okay,
So
so
they'll
you're
put
you're helping them
30%
find a
down.
lot. You're helping them find a builder, get financing, and then they're building a brand new house from the ground up. Basically, they're having that put
Yeah.
together. Yep.
I'm not the first investor that is going to these builders and is saying, okay, which properties do you have? Which lots do you have? What's the floor plans? And okay, let me choose one, right? And it's going to be it's built to rent. It's ready to rent. The problem is permits in Florida, depending on where, can take a long time. But builders can build a house, in the US, I've seen it many times before in 6 months, sometimes
Yeah.
8, sometimes 10. But it doesn't take a long time. In Israel, you'd be surprised how slow things can be.
Or well, you got thousands of years of history, so it's a different perspective, right? It's biblical in perspective. Uh,
But really, I think the main thing I'm trying to explain to investors, and this
yeah.
including your listeners, is that the miracle of the 30-year fixed rate mortgage is a miracle that's going to continue for the long haul.
Plus, it's unique to the States. I'm here
And
in
it's
Canada. We don't have those. We've got 30-year mortgages amortization, but typically the longest term you can get on a mortgage is 5 or 7 years, at which point you have to go back in and renew that mortgage at whatever the interest rate of the day is or
right.
variable. So that's something that I don't know, you got a bigger perspective on this than I do, Ronnie, but I don't think there's anywhere else in the world that has 30-year fixed mortgages like the US of A.
I haven't investigated it. I met somebody that says that Netherlands, or was it
Maybe.
Netherlands, or yeah, that there's some country in Europe that does that. But basically, when you look at the history, a lot of people made a lot of money in real estate in the last 20 years when just all they had to do is the interest rate go down and market goes up, you refinance and so forth. That's amazing. But what I'm saying is that if you choose to market correctly, it doesn't matter what the interest rate were. Because if I would come to you and I say, listen, it's 1985, an interest rate of 12.5%. Do you want to buy a house in Las Vegas for $40,000? You would have said, are you crazy? It's 12%. I'm not buying that, right? But people that had the courage to invest in 12% made a lot of money because what matters is the economy of Las Vegas much more than
Than the
interest rate
interest
on the
rate.
long run. You
Yeah.
don't know what the interest is going to be. Everybody's trying to guess it all the time.
Yeah.
So I think in 1978, the US made that officially that the banks need to give this 30-year fixed rate mortgage. They built this whole collateral debt and all that stuff around it, the entire market. And it doesn't make any sense for somebody to give you that loan. They only give you the loan because they keep selling it
Yeah.
and transferring it all the time. And all
Which
you
has
it's
its
the
pros
only
and its cons, a little meltdown here and there every once in a while, market correction.
right.
But yeah,
And
I guess from my perspective, Ronnie, again, not being an American, being an outsider looking in, it's the stability. Like if you get that mortgage, 30-year fixed, number one, you know what your payments are going to be for now to the next 30 years if you hold on to that mortgage. If rates drop drastically in the next few years, you can always go in and get that property refinanced with a different bank at a lower rate, right? You're not stuck for the 30 years. You've got the option. Is that correct?
Right.
Am I on the right track there?
Yeah, yeah.
Yeah.
Just for example, again, the government in Israel tells the banks, do not let people cash out refinance. Do not let, they can do 20% loan to value, maybe 40, I don't know. It's really minimal. The government will, and in the US, it's a deep and wide market.
Mhm.
And the mortgage, the American mortgage is the only thing that doesn't go up with inflation. I took a $250,000 loan 2 months ago. Okay. The Big Mac, if you look at the Big Mac in Canada or New York, in the last 20 years, they've gone up. The stamp gone up. Ice cream's gone up. Everything goes up. Just your loan does not. So my quarter million
The
dollars, even
rate
if I
on your
take,
loan. Is that what you're talking about? The rate on your loan?
sorry,
The rate on your loan.
not the rate.
The
The rate is
principal.
another thing, but the actual loan itself,
Yeah, the
a
principal
hundred
portion.
thousand dollars. If you look at $100,000 and assume 4% inflation for 20 years, you are left with $44. So just the fact that I owe less because it's worth less, the money is worth less is amazing. And then I get a fixed rate, meaning that I don't own the risk on bank rates changing. I locked it and I can only go lower. I'm not going to go higher.
Yeah.
Is great. Then all you're left with is to find the right local team. It's a realtor, it's a builder, it's a property manager. After you did analysis, and you can do it all over the States. Everything is open, There's great markets. Right now, everything is expensive. It's really hard to find a brand new construction where the numbers work.
Yeah.
But when I started back in 2004, which was, I came to my realtor in Austin, Texas. I flew to Austin, and it felt like there's many Californians flying into Austin and investing in the Austin area.
Mm-hmm.
And 2 years later, 3 or 4 years, it kind of blew up, and you kind of discovered that things underneath the carpet weren't as they were presented.
Yeah.
But there were other markets. People talked about Orlando. Phoenix still worked.
Yeah, I think people don't lose track of the size of America, how huge it is, and how many different markets there are, right? It's mind-boggling.
Yeah, and people think that, oh, look at what happened in 2008, and it's correct. But the things that really had value, if you look at La Jolla in California or Orlando, they lost value, but there was still a good market. The local economy is strong. There's enough millionaires who want to live in La Jolla. But I went to Denver in 2008, and the banks were foreclosing houses that used to sell for 200 for 80, 70.
Yeah.
Okay, so if there's another crash, I keep telling people that's an opportunity. A crash means lower rate. A cash means arbitrage, imbalance, and so forth.
Yeah, very good. Rani, if people would like to connect with you and find out more and perhaps work with you, where should they go? If you only had one place to send them, where would you send them?
I go to tamari-invest.com. That's my website. Or if they want to email me, tamari.invest@gmail. And any questions, there's a lot of people that came to me and says, I'm interested, but I want to do multifamily. I want to do rehab, BRR, and so forth. So I'm in the market. I know a lot of people, although I pass them to the right person. But I've been in high tech. I've been in high tech from '99 to last year. I left Intel a year and a half ago, as I was getting divorced, to do this because I have a vision that people just explain the fact that things that look really risky and very far away, after the invention of the internet, which I saw in my lifetime, is really not that scary. So I hope your listeners that haven't bought themselves a rental yet can get the courage to slowly put a little bit of money and start moving forward.
Fantastic. All right, Rani. Well, thank you very much. And everybody, thanks for tuning in. We'll see you on the next episode. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.